guys, so SEBI has just carried out one of the most significant cleanup of mutual fund cost structure, and while it may sound very technical, but it has direct implication for all the investors, especially cost-wise, who are investing in equity, debt, index or ETF funds. So let's break this down and let's understand what's in store exactly for you as an investor. We are joined by none other than Mr. DP Singh of SBI Mutual Fund. DP sir, hi, evening, welcome to the show. Thank you so much for taking time out for this exclusive conversation. And yes, much awaited decision. And from a retail investor's perspective and the impact, stripping away the jargon, while this reform actually puts more money in investors' pockets, or is it mainly an accounting cleanup? How would you like to explain this entire step?
Kavita, thank you so much for having me on the show, first of all. And see, yes, it's mixture of all. It's mixture of cleanup, it's mixture of accounting, and it's bringing down the cost for the investor and investor. The earlier the TER concept was inclusive of all the whatever STT, GST, any other levy, government levy was included within TER. And the levies are always dynamic in nature. These are not fixed. Today it could be X percentage, tomorrow it could be any other percentage. So keeping them within the TER was not uh, a right thing to do, but that has been taken care of. That has been kept out. This is in line with all other BFSA products. You talk insurance, you talk about any other thing. The expenses are always exclusive of taxes. So base expense ratio now will be there, and whatever the extra levies are there, those will be over and above that. So that transparency has been brought in a very, very clean manner. And the second, the major option has been the 5 basis points, which were being given as a compensation for the exit loads, which were earlier used to be given to the AMCs, and later on it was being put in the schemes. Against that, 5 paisa compensation was being allowed, which was brought down from earlier 20 paisa. So that has been taken away. I think that 5 basis point when it was started, the whole industry was in a different era. Today, the whole mutual fund industry in a different era. That definitely will impact the gross revenues of the fund houses by the same basis points. But yes, that's what it is that we have to accept.
Absolutely. Let's also understand this from an SIP investor's point of view. We are looking at the SIP numbers, at record high every month now, sir. So for a 15-year SIP investor, does a 30-50 basis point cost difference meaningfully change outcomes, or are returns still the dominant factor?
Oh, so definitely every single basis points make a difference.
Okay.
There's 5 basis points, then the compounding effect. If 5, 10 years, if it makes overall 0.5% of difference, then also it's a good enough. That is in the pocket of the investor. So this is the advantage of this thing. But see, all said and done, there are costs involved. There are other things involved. We all are the commercial organization who are doing it. We have to align our profitability with the outside world as well. We have to have growth, though we don't need capital per se, but we need capital for growth, for reaching out to more and more number of customers. But I think this is a very balanced, whatever has been done in a very balanced manner. It doesn't impact anybody. It's not pinching anybody, right? When it's there, yes, it's impact. And the advantage, unit holders. That's the point. Whatever has happened, it will be transparent for the unit holders. It will be beneficial for the unit holders, and regulators and fund houses like ours. We are always there for the unit holders. See, everything else is a byproduct.
Right, right. So a couple of more questions on the same lines. For example, large equity funds, let's talk about that. They now have a PER cap of, just 0.95%. Now, is scale finally being passed on to the investors, or will AMCs compensate by launching more niche, high cost products over here? What do you say?
See, categorization circular is already there, always
Right.
there. And see, all the fund houses, they are at a different stage in the life cycle. The fund houses like ours, we have already done, I think our bouquet is complete, so we'll not be able to add more products, even if we wish like. The other ones, the newer ones who are not completed their bouquet, they will definitely come out with those category of products. So it's ultimately it's a life cycle of the fund. It's the life cycle of the fund house. It's the life cycle of the individual investor as well, for how long he has remained invested in the fund. So now the benefit is already being passed on to the investor in an automatic route. Today, if there's a fund of 50,000 crore, the expense ratio is the lowest, and that benefit is already going to the unit holder. So going forward, I mean, like this 95 basis point at 50,000 crore, which in turn turns out to be around 1.14, 1.15, whatever. I don't know the exact number on the average basis. That is the maximum which we can charge in that scheme. So against a 2% or 2.25% for a smaller fund size fund, to 1% or 1.10% is that will be the number now for going forward for even the biggest fund size. So that's how it is. So benefit always goes with the increase in size. Benefit automatically goes to the investor.
So now should investors expect their TERs to fall in the next 12 months? How do you see it going ahead?
See, generally the unit holders don't look at it because that is an automated route. See, one fund house, when they invested money, say 5 years ago, and the fund house was 10,000 crore. Suppose the expense ratio at that point in time was 1.6 or 1.7. Today, if the same fund has become, see, 50,000 crore fund, the expense ratio would have already come from 1.6 to 1.15 or 1.20 already. So that's how it works. But the bigger the size, lesser the expense ratio. That is a basic rule, and that's where it stops at 50,000. 50,000, whatever comes at the 50,000, that becomes the minimum.
Right, right. One very important question on cost and margins now. SEBI has tightened expenses and brokerage caps across categories. Now, just want to understand, from a stakeholder's point of view, does this hurt AMC profitability or were investors already overpaying?
I don't think so because it's different time. You see, there is a fixed cost. The kind of investments which are being made today on the research, the investment on the fund management teams, the so-called. But actually, our industry, our in India, we are the only country where we have this regular plan and direct plan. The people who are evolved, who know about the market, they already have the option of coming into the direct plans, and not number of people are coming into direct plans, and they're hardly paying anywhere between 50, 60 basis point to 100 basis point. That is the generally the expense ratio. And I don't think with the kind of value creation which happens at the fund house level, the 50, 60 basis point or 100 basis point is a very, very high cost to put. Actually, we are the cheapest in the globe as on date.
Mhm. That's actually true. But then let's also look at the index funds and ETFs. Now they have strict cost caps. Talking about active funds or comparing that fee structure, are active fund fees now becoming hard to justify purely on performance?
See, performance is something which you cannot have 1 year unit, because see, all the fund houses, all the stocks, they perform in cycles, right? Today, maybe if I'm having a high conviction on a particular stock and our fund is invested in that, that may give return within 1 year. That may not give in first year. It may come in second or third year. If we are convinced on the company, about the management, about the quality, about the growth trajectory, then we'll wait for that. We are not traders, right? So we always tell our unit holders also that if you are investing in equity funds, so please come for minimum 3 to 5 years. It should not be less than 1 year. So when we look at the say performance 1 year, non-performing can be a fund, can be a very, very good long-term bet. And 1 year high performing fund may not be a good bet for the long term. This is something which we have to understand. This is not a straight line. This is not a fixed deposit. This is a fund which where the returns will come over the period of time. Yes, if you get something in the shorter period, that should be taken as a bonus only. But eventually, it's always advisable to put in money for more than 3 years.
Okay. Now with brokerage caps sharply gone lower, now will AMCs trade less or just find new ways to pass costs indirectly?
So that's not possible. See, first thing was it's not come down sharply. It was 12 basis point inclusive of all the levies. Out of it, 2.5 two and a half basis point for the levies. Now it's 6 basis point plus levies. So it's around 7.58, eight and a half basis points. That's number one. Number two, the volumes have grown manifold over the period of time. If you look at the last 3 to 5 years, volumes have grown manifold. And in any case, I mean, see, all the fund houses are not paying the highest level of 12 basis points. The average cost at the industry in any case was 7 to 8 basis points. So it will get rationalized over the period of time. It will, I mean, the reset button will be pushed, and I think things will be clearer once it becomes a regulation, once it comes into being. I think, again, as I said, in case of AMCs, even in the case of, say, brokerage houses, it's not a big kind of, I mean, negative impact on them. And I sincerely thank regulator when it was a collaborative, it was a, I mean, say, discussion mode, deliberations happened, and the rationalization have happened exactly after the positive deliberations with the stakeholders.
So now lower brokerage means lower distributor incentive also. You are also very thick with the distributors and with the industry stakeholders. Just want to get a sense, do you expect a pushback from the distribution network?
No, I don't think so, because yes, there will be impact, but the impact is not very big. The impact will be, even if it's 5 basis point, which is the impact. The impact on the brokerage will be 3 to 4 basis point or 2 to 3 basis point. That's what it is. So that's not very meaningful impact. But I think there are ways and means of looking at things. How you look at it. If the growth is happening in the economy, I think this 2 3 basis point will automatically be taken care of.
Right. But sir, how would you like to handhold them now, for all the distributor advisor fraternity? Lower brokerages means lower commissions. Does this finally reduce the incentive for unnecessary churning? Do you expect distributors to push investors more aggressively toward direct plans now? Will this regulation change how advisors construct portfolios, or will most investors not notice any difference? How do you look at it?
No, the commissions and brokerages have to be seen separately. Commissions
Sure.
which are being paid on sale of mutual fund is different, and the brokerages to pay to the broker houses are two different things. And what I'm saying, the commission to the distributor is always a percentage of the expense ratios which are being charged. Now, since the expense ratios have come down by 5 basis points, there will be a little impact, and we hope and wish that this will be taken care by the volume, more volumes and growth in the economy, growth in the market. That will be nullified with that. That's that. I think that should not be a very negative impact on the industry. I don't foresee any big change in this.
All right. So one quick round of rapid fire, active or passive, which wins these reforms?
Both
Okay.
both are the winning strategies.
Okay. Big AMC or small AMCs are the winners?
Big AMC have its own benefits. Small players, they're very niche players. I am from the larger, so I will always say big.
Sure, sure. Direct plans or regular plans win?
Depends upon the involvement of the individual. If somebody knows very much and is confident that he knows everything, then he should come direct plan. But otherwise, advisory is the most important thing. Some hand holding has to be required, and distribution channels are very important for our business.
Sure. Cost transparency or governance? Now, what matters more now?
Governance always take its share, but cost and governance go hand in hand. But governance is always on the top.
All right. Always lovely speaking to you, sir. Thank you so much for taking time out and breaking this down for our investors. And now the onus is on the investors. Yes, definitely one has to look in the what kind of investment strategies they want, what kind of exposure and funds. But then, yes, it's a win-win for the investors' pocket and their investments going forward. Thank you so much for taking your time out today for us. Thank you.
Thank you, Kavita. Thanks a lot.
And with that, it's time for a short break. And post that, let's begin our very special segment.
Go